benchmarks fall for 2 straight periods to end over 1.5% lower. Broader markets also underperform. All sectoral indices end in red except pharma. ZEE extends losses, drops 32% after Sony called off the merger deal, drags Nifty media lower. HDFC Bank hits a 52-week low. Market cap falls below 11 lakh crore rupees. The lender contributes 90 points to Nifty's downside. PM Modi announces Pradhan Mantri Suryodaya Yojana with an aim to install rooftop solar systems for 1 crore families and get close to 10,000 megawatt of rooftop solar capacity. Canada announces a 2-year cap on international student visas to tackle the ongoing housing crisis, move likely to impact Indian students seeking to study in the country. Hello and welcome. You're watching The Reporter on NDTV Profit, and I'm your host Pragati Oberoi. Now, before we delve deep into the show, let's take a quick look at how the markets fared during the day. A relatively choppy day at the start of the week, and my colleague Neeraj Shah joins in with a quick wrap of all the market action.
Well, a red day to the market, on the markets today. Sensex down 1,000 or over 1,000, the Nifty about 333 points. It didn't look good at all for the markets today. And the banks, you could argue, on the large cap end were the principal culprits, down about 1,000 points for the Nifty bank as well, 2% lower. But it was not just about banks, by the way, today. Look at the broader end of the spectrum and the kind of pain that came in at the mid cap and the small cap end, and that was really painful. So the about 500 points, 3% or 3% for the mid cap index. The small cap index too, about 2.5 or thereabouts, 2.7% actually. So it didn't look great at the broader end of the spectrum either. The market breadth widened and looked terrible as the day ended. So that was the problem. Now, the Nifty heat map first. And this looks the reverse of what it looked at the start of the trading day today. So yes, we have corrective moves in banks. You can see that IndusInd Bank, HDFC Bank, Axis Bank and SBI up 4% down were amongst the key culprits. But that was not all, by the way. There was weakness in ONGC, Coal India. And while defensive bent of the market was seen, you still had defensives like HUL, for example, not looking great. Colgate with results not looking great. What did well? Cipla, strong move, 7% higher on the back of what looked or what was a pretty strong quarter. There was strength in Sun Pharma, Bharti Airtel, to an extent, and ICICI Bank on a day when banks didn't do well. This one, after the results, really stood out in trade. In fact, we should pull up the rate sensitive pack and try and see what were the winners and losers. So on the banks, for example, let's get the percentage moves on the banks. ICICI Bank up 1.9%, doing strong. But look at what led the banks lower. IDFC down 6%, IndusInd Bank 6%, PNB, AU Small, BOB, Fed Bank, HDFC Bank 3.5% lower yet again. 5th straight day of a fall for HDFC Bank. So that bucket looked very, very wobbly. Speaking of rate sensitives, real estate had a very big wobble as well in the session. Look at the kind of moves that have come in. Prestige down 11, Oberoi. But it was not just that. Sobha, Brigade, DLF, the big boy, down about 4% as well. So it looked very weak, and not a single stock in Nifty Realty in the green. Just showed how the stocks just fell like 9 pins in the session today. Then railways had a weak day. And let's start with RVNL, which was down 10%, but that was not all. You look at Railtel, you look at IRFC, you look at Orcon, whatever. That entire bucket, Titagarh, Texmaco, that entire bucket of stocks had a corrective move today. And the valuations, I would argue, is the principal reason that valuations are stretched and the stocks had such a massive run up that some bit of a fall was probably to be anticipated. So very weak day for them. What did well, just as we wrap up, outliers, if you will, right? So we spoke about Cipla as being the outlier. We spoke about Petronet LNG. I haven't spoken about it, but Qatar and India signed long-term agreements, and Petronet LNG up about 5%, as well as Aegis Logistics was up. And the renewable stocks, PM Modi's tweet about rooftop solars got Adani Green to Borosil Renewables to Wari Renewables, all of those very, very excited. Tata Power too in the green. So this is the set of stocks which kind of bucked the trend in the session, but looked very wobbly. We're interested to see what the global markets do today and what's the kind of takeaway that we have for the markets tomorrow.
That was the market wrap for you. Now, we also spoke to the managing partner and CIO of Complete Circle, Gurmeet Chadda. Here's what he had to say about the FPI norms issued by SEBI.
I think there's a bit of confusion also on the FPI norms. Apparently, SEBI is unwilling to extend the 1st Feb deadline, which they have identified some high-risk funds in FPIs, which is amounting to about a little over 2 lakh crore. So that could also be one of the reasons for the sell-off today. If you see actually from the peak, Nifty is almost fallen 500 points. So, and bull market corrections are very sharp. When markets are slightly expensive, they will look for reasons. And so sometimes the reasons are known in hindsight. Also, if you see last, let's say, calendar year, mid and small cap has gone up 40-50%. So some of it will come back. So I think maybe in large cap, probably the downside could be limited because we still trade at roughly 19-20 times. And half of the index, which is HDFC, Reliance, Epac, a lot of these banks are not really as expensive. So in my view, maybe the index level, maybe some downside. But I think small mid caps, you could see a little more correction from these levels.
Now, we also have an NDTV Profit exclusive on the ZEE Sony merger collapse for you. Tamanna is joining us with more on this. Tamanna, what are you gathering from your sources after the deal has fallen apart?
Remember, we broke this story first on India Market Open, before markets opened, and you've seen the tumble in the stock. Now, what are the exclusive details we have? It's about how this negotiation, which went on really for 3 years and 4 months, finally ended despite a 1-month extension. Remember, till about 20th of Jan, good faith negotiations were still on between the two parties. But at the end of it, it came down to 3 rejections from Sony's side that actually pulled the plug. First, 2 rejections of proposals from ZEE, and the 3rd rejection on a request for extension of timeline. So first, let's tell you what the 2 proposals were. The first proposal by ZEE, and remember, these details you saw exclusively first on NDTV Profit, was that let the merger go through as approved by shareholders, which meant the merged entity would first begin with Puneet Goenka at the helm. But going forward, there would be a conversation, they'd sit across the table from each other and actually negotiate the hunt for a neutral CEO, one that would be acceptable to both sides, ZEE and Sony. This proposal was rejected by Sony. Let's come to the second proposal, which was that Puneet Goenka will step down. And this is important because that was the bone of contention. Sony ostensibly did not want Puneet Goenka at the helm of affairs. So he was willing to step down. But what ZEE was asking for was a board seat for Mr. Goenka or the promoter family / a nominee. So 1 board seat. Remember, at this point, they have just 4% share in the company. This also was rejected by Sony. So what was acceptable? What was the combination acceptable to Sony? It was flat out that Puneet Goenka goes, there is no board seat, and NP Singh becomes the head of the new merged entity. That is really where the negotiations broke down. But what the market will also look at is what happens next, because the story is not ending here. ZEE is surely headed to court, and a legal battle is the next leg of this entire story.
That was our exclusive for you on the ZEE Sony merger deal that recently collapsed. Now, another big headline maker, HDFC Bank. Pain continues for HDFC Bank as the shares plunged on a bearish market sentiment. The stock crashed 3.5%. And for more updates, we are now joined by our colleague Vishwanath Nair to explain what exactly is up with the stock.
Yeah, so HDFC Bank announced its results last Tuesday, and since then you've seen this consistent sort of reaction within the market. The numbers per se were not so bad, but there were certain areas, certain ratios which did not make a lot of sense to the market. Like, for example, the net interest margin did not make sense, it being flat and there being no close commentary on how it is going to move going ahead. Similarly, on the earnings per share, you saw a year-on-year cut for the first time in a decade. Now, obviously, a lot of that has played out over the last few days. But what we understand is that the the negative sort of sentiment on the stock is largely coming from the domestic investors, the domestic clients. So what CLSA has said in a report essentially is that for the foreign investors, the expectation is that the worst seems to be over. You're seeing things improving at HDFC Bank, and of course, in the near term, you will, in the medium term at least, you will see the benefits of the merger playing out. However, the domestic investors believe that there's an issue here because what the bank is guiding for, about a 15 to 17% loan growth, that along with a improving margin scenario is completely an impossible sort of situation, primarily because to fund that 15 to 17% loan growth, you need deposits about roughly 5 lakh crore. And if you want to raise that amount of deposits, you need to raise deposit rates. And if you raise deposit rates, obviously the margins are not going to look that good. What the domestic investors, what CLSA notes amongst domestic investors is that the ratio of bulls to bears has been higher in terms of the bears outweighing the bulls on the domestic investor front, while on the foreign investor side, you're seeing slightly more bullish commentary coming in. Now, that's what CLSA seems to suggest. We still need to see what exactly the market does with HDFC Bank. However, numbers at this point in time definitely showing a concern for future growth.
Well, thanks so much, Bishi, for that update. And that was our 2 bits on what exactly is up with HDFC Bank stock. Now, moving on, Airtel's arm, Bharti Hexacon, has also filed for an IPO. Now, the interesting bit here is that this is the first IPO by Bharti Group in over 12 years. My colleague Smriti is standing by to tell us more on this. Smriti, how will Bharti Hexacom go about this offer? What are the plans like?
Hi, good afternoon, Pragati. In this whole thing, it's a purely offer for sale IPO with the government divesting 20% of the 30% stake that it holds in Bharti Hexacom. The rest of the 70% stake is held by Bharti Airtel. Now, let's look at what the company does. It provides telecom services in Rajasthan and Northeast circles only. If you look at the financials, its revenue in FY23 was at 6,500 odd crores versus 5,400 crores in the previous year. Net profit was kind of lower actually, 549 versus 1,674 crore in the previous year. Now, this is because of an exceptional item that was there in FY22 that is why we see that gap happening. The operating profit was around 2,925 crore. That is 44% up from the previous year. Now, if you look at the total borrowings of the company, they stand. It stood around 6,200 crores at the end of September. Then the net cash was only at 46 crore at the end of September as well. If you look at the risk factors that may affect the IPO or the company's future, is that the company has a very concentrated portfolio. It's only present in Rajasthan and Northeast. So the growth potential and the subscriber addition is very limited. And there's competition present in these circles as well. Also, the company will require more capex, especially in the Northeast, where there are difficult terrains and harsher weather conditions. They'll also have to put capex, more telecom towers in the remote area. So these are a couple of risk factors for the company that's going through that'll come up with an IPO, and it's just filed the draft red herring perspective. We'll be looking more and coming to you on more details on that.
All right, so Smriti, thanks so much for bringing us those details. Now, our deal velocity is likely to sustain, and that's exactly what has been said by CoForce CEO Sudhir Singh in a recent conversation with my colleague Tushardeep Singh. Now, the CoForce CEO also dived deep on how they are close to hitting the $1 billion order book executable mark. A chunk of the conversation for you.
If you look at us, and it's not just 8 quarters, as you rightly said, of $300 million plus deals. What's always marked us out is when we do talk about large deals, we follow that up with revenue growth in the subsequent quarters. So, as we look at our current pipeline, we feel very good. We feel very confident about the fact that the deal velocity is likely to sustain, and that it will continue to drive growth for us. If you look at our results at the end of the first 3 quarters, year to date, end of the first 3 quarters, we are growing 14.7%. This is constant currency growth. This is all organic growth. So we're doing that currently off the back of the large deals that we have been signing. This year, we've already signed 8 large deals. Last quarter, quarter 3, seasonally weak quarter, we've signed 3 large deals. So I expect the large deal velocity will sustain given the pipeline that we're looking at right now.
What is the size of the executable order book, so if you can give us some color on it?
It's $974 million US. We're very close to a milestone that we've been looking at for a while now, which is $1 billion in terms of order executable. Our order executable also, interestingly, is not just signed orders extrapolated over the next 12 months. It is just a simple arithmetic addition of all statement of work signed. So if something's been signed only for 3 months, that's the only period that we add to. Currently, it's at $974 million, tantalizingly close to the $1 billion mark that we've been looking forward to.
That was CoForce management for you. Now it's time for a short break, but stay tuned because we have lots more lined up for you. Stay tuned. Welcome back. You're watching The Reporter on NDTV Profit. Now, PM Modi announced Pradhan Mantri Suryodaya Yojana. This scheme aims to install rooftop solar systems for 1 crore families. My colleague Vikas joins us with more on this.
According to our calculations, what we were looking at, since details have not yet come out, so if every household takes or consumes close to say 1 kilowatt hour of capacity, So that would require a total installation of close to 10,000 megawatt, and an investment at 5 crore rupees per megawatt, it would be close to 50,000 crore for the initial this 1 crore households that the PM has spoken about. So based on that, all the top companies, especially solar panel manufacturers, be it Adani Power, now Reliance wants to enter into it, and even JSW Energy, Adani Solar, Tata Power, they all are going to benefit out of it. And if we are looking at only rooftop, so right now India's total installed capacity in rooftop is around 12.5 gigawatt, out of which rooftop solar for residentials is only 2.2 gigawatt. So this would be an additional 10 gigawatt of new capacities which will come up for rooftop solar segment. Even the poorer segment of people who have not been able to purchase power, so they can benefit out of it through economical power, and also surplus power can be sold on grid also. So that's how also they are going to benefit out of this scheme. More details are awaited, and after that we can come out with more perspective on it.
Well, thanks so much for bringing us those updates, Vikas. Let's move on to Axis Bank. The lender has just reported its third quarter numbers, and from what we are seeing, the numbers are largely in line with analyst estimates. The net profit is up about 3.7% year on year at about 6,071 crore rupees. Asset quality, which was one metric that the analysts were looking at and they expected it to be stable, is seeing some sort of a teppish movement there. The gross NPA, while they have gone down, the net NPA have stayed flat. We have our colleague Mimamsa joining in to explain the numbers, and let's delve deep into it. So what are the numbers looking like?
Right, hi Pragati. So Axis Bank has reported net profit, which is 3.7% higher on-year basis to rupees 6,071 crores. This met analyst estimates. On a sequential basis too, the net profit rose 3.5%. Now this rise in net profit is due to lower provisions. On year-on-year basis, the provisions were down to rupees 1,028 crore, out of which the bank made provisions of rupees 181.7 crore in quarter 3 with respect to the AIF investments, the exposure to alternative investment funds. On the net interest income or core income, the core income rose 9.4% year on year to 12,532 crore rupees. Asset quality, like you mentioned, has remained stable, pretty much what analysts were expecting, with gross NPA falling to 1.58% versus 1.73%. One more thing that I would want to highlight is that the capital adequacy ratio took a hit of 168 basis points to 14.88% as on December 31, which is due to the RBI's move to increase credit risk weight, which required banks across the board to set aside extra capital to against such kind of lending.
Right, Mimamsa, thanks so much for bringing us that update. AIF investment is definitely one point that we have now seeing across banks coming up and telling about their exposures to that. Axis Bank is one bank whose earnings and more details we'll be bringing to you as soon. Let's quickly get an update on Byos. Now, according to Bloomberg, the company has slashed its valuation by more than 90% to raise fresh funds. In a fresh blow to this move, my colleague Rishabh Bhatnagar joins in, who also tracks the company extremely closely, to tell us more as to what is now up with Byos.
That's right, Pragati. We're getting a Bloomberg report that is saying that Byos is set to undergo about a 90% cut in valuation now to raise funds. As we know, over the past year or so, it has had a very, very rough past 12 months. There is a working capital crunch. There's multiple legal battles. And in that process, it has obviously wanting to raise funds. So the next round that it will go for, it is looking to raise about $100 million. And that will come at a valuation of about $2 billion, which is a 90% cut to its $22 billion valuation that it commanded only in 2022. What we're also seeing is that Baiju Ravindran is set to participate in that share sale, and he will do that to retain whatever stake he has. Plus, we can expect a lot of other early backers of Byos to also take part in that. So let's see when, and the company hasn't yet commented on this, so it's to be seen when it will undergo this sort of stake sale.
Right, Rish, thank you so much for bringing us those updates. Now, we also had the chance to speak to the management of Epac Durable, which is now looking to raise a fresh issue of 400 crore rupees. Here's what they had to say about how the company plans to use the IPO money.
Issue is 400 crores, of course, the fresh issue. So out of which 230 crores will be, plowed back in the company for increasing our capacities further beyond FY25, because as the present capacity is, of course, covers us for our targets up to FY25, but beyond FY25 also we looking at the humongous size of expansions beyond 25 also the market is going to grow substantially. So we have to keep ourselves ready. So because of this we are have to infuse 230 crores up to 400 crores. 80 crores will be used for paying off our long-term debt, and the balance is for general expenses.
Well, that's all that we have for you on The Reporter. For more news and updates, please keep watching NDTV Profit.